Hey guys, welcome to the webinar. I'm just going to give it another couple of minutes just for anyone who's late joining, who's just now checking their emails, and then we'll start the stream. Just bear with us for another couple of minutes. Alright, it's just gone past. We're going to start now anyway. Anyone who joins late will be able to rewind it and watch from the start anyway. This is going to be a nice webinar, about half an hour to 45 minutes, and it's going to be an introduction to trading Forex. I'm going to show you exactly what I do, what Forex is exactly, because a lot of people don't really understand quite what it is. It seems like quite a hard thing to get into, when in reality most people have actually traded Forex, probably in the last week. So going forwards, just so you all know who I am, if you haven't actually seen our company before, my name's Tyler. I'm the CEO of Success Syndicate, which is the company that I built after learning to trade, where I basically had a dream of teaching other people how to trade. And I wanted to get as many people to be able to get out of the 9-to-5 trap as possible, just by actually going out and trading, because, well, as you'll see throughout the webinar, it allows you to do that. So as you can see, I was able to achieve my goal of financial freedom from trading Forex. There's a few pictures on there, just some of the places I've been while I've been traveling. And this is all from just trading Forex. I used to be a software developer about 2 years ago before I quit my job. I started learning while I was in that job. And basically as I started making more profits and making more than I made at the job, I realized it was probably better to quit and do this full time. Up until today, I'm now the CEO, as I said, of Success Syndicate, and we have over 1,000 different worldwide students with us, all learning to trade. In today's webinar, we're going to be going over the basics of Forex. As I said, I'm going to show exactly how it works in detail, what actually drives the markets. You're going to get an introduction to the currency pair graphs that we use to actually trade. I'll show you a few of the really simple technical and fundamental analysis techniques that you can use. However, we won't get into anything too advanced here. So if you've already traded before and you're looking for like a new strategy, this probably won't be the webinar for you. It's more aimed at teaching people what Forex actually is and how to get into it. So if you don't know much about Forex, basically what we do is just predict future moves of the charts of currency exchange rates. So I'm going to be showing you how to actually enter and close those trades, the best way to get started trading Forex, and then anyone who stays to the end, there's going to be a special bonus for you too. Now, as it says at the bottom there, feel free to ask any questions at any time. This is less like a presentation and more just like a group call, apart from obviously we couldn't have everyone on mics because it would get quite loud. But any questions that you have, put them in the group chat, because the chances about 10 other people are probably thinking the same thing. So just ask it. The only stupid question is the one that isn't asked at all. So just really quickly, what actually are the benefits of Forex trading over a 9-to-5 job? You get the typical so-called laptop lifestyle, where you're able to actually work from anywhere in the world just needing a laptop. On top of that, as you get with most laptop lifestyle jobs, as you call them, you get uncapped earnings because you're in control of how much you're actually making rather than a person paying you at a job. Depending on which country you're from, you may have some tax advantages. In the UK, you can get away with trading tax-free by basically by spread betting, which is similar to trading, but instead of actually owning the currency when you trade it, you bet on a contract for difference, which is quite complicated to explain, but basically it means it's tax-free. The other thing is it's safe and well established. It's not just going to fade away, which is normally the opposite of what a lot of people think. They have this mindset that Forex is just like another one of those online scams. And a lot of people also relate it to cryptocurrency, which you'll see is nothing to do with cryptocurrency. Forex traders actually trade real currencies like the Great British Pound, the US dollar, the Euro, And so, you know, these are actual currencies that are backed by something real rather than just something that's been made up. The main benefit to actually trading Forex over a 9 to 5 job is instead of going to the job and selling 9 hours of your day for a set wage, you instead take the money that you already have and make it work for you so that you still get your time. You basically leverage money to get your time back and still make more money rather than just selling your time to make more. This can be difficult to get your head around at first because it seems a bit different to be risking your money to make money, but you won't find anyone rich out there that hasn't risked any of their money to get there. So all in all, basically means you get freedom, you get more money and more time, but that makes it sound all great and easy, and in reality it isn't that easy. You do actually have to learn it like you would with anything that's going to pay you well. I like to say that a lot of people go to uni or university and they would pay about £40,000 to learn maybe, well, any profession that you want to go to uni for, and then they still come out with a 9 to 5 job and haven't really got anywhere in that aspect. So as well as that, they're spending like 3 years in there doing exams and learning. So anyone who thinks you can get into Forex and get rich overnight off it, that's not reality at all. A lot of people will tell you that's reality, but they're not really there to try and teach you. So actually, what is Forex? And Forex is just short for foreign exchange, which is very similar to the stock market, except way, way bigger. A lot of people also think the stock market would be bigger than the Forex market, but like I just said, that's not true at all. Every single foreign exchange that ever happens between two currencies will go on through the Forex market, and that's over 5 trillion in currency traded every day. You're welcome, Amy. Honestly, like, we just go for honesty and transparency when we're trying to teach people. We're actually here to like show you what Forex is and not just what people try and make you believe it is. So here's the other thing. A lot of people also think that they've never traded Forex, and a lot of people really have lots of times before. If you've ever gone on holiday and gone to the post office or wherever to exchange your local currency for another one, that's a trade in the Forex market. So using either your phone or a computer, you can actually exchange these currencies without needing to go to the physical place like a post office. And obviously it takes way less time, you just click a button. In a very short way of describing it, as long as you predict the direction of an exchange rate correctly, you will make money. If you predict it wrong, then of course you're going to lose money. There's more that goes into it than just that, but that is the key concept. And as I said earlier, like anything worth doing, it's not easy, but it is possible to learn. We have over 1,000 students, and I have some that have gone from, well, we had like our best result that we've had is someone from £250 up into about 60k recently, I believe. So you can do it, but he didn't do that overnight. That takes a long time to learn. But the question is really, will you? A lot of people don't. It's a lot of action to take, and they're not willing to, you know, take that much action and dedicate to it. But honestly, I can say from my experience, I wouldn't like do it any other way. I wish, if I could, that I would have learnt this sooner, and then could have quit my job or not actually had the job in the first place. So the big part of Forex is currency pairs. As I said, in the stock market, which is a bit similar to Forex, you would normally invest in the value of a company. So you would find, say, Apple and predict that they're going to go up in value and buy their stock. In Forex instead, you get 2 different currencies, hence currency pair. So the most common pair that people trade is Euro USD. And this is obviously just the Euro versus the US dollar. So we can see in the picture at the bottom, it says 1.1299. That means the exchange rate for €1 to $1 is 1.1299. This is pretty close to 1.13. So we can say that it's just 1.13 for this example. So this would mean that €1, the base currency, would get you $1.13. This exchange rate will fluctuate, as you can see at the bottom, based on the supply and demand of each currency in the pair. If the euro goes up in demand, as in more people want the euro, this will make this exchange rate go up. And if more people want the dollar, the exchange rate's going to go down. So when you actually look at these currency pairs and exchange rates, we look at the actual graphs so we can see how it's moved in history. Here's an example of it now, and I know it looks pretty technical and complicated, but I'm going to break this graph down for you in a few slides and you'll be able to understand what it actually means. First of all, if this is your first time ever seeing a chart, down the left and right side you can see the price or the exchange rate. And normally at the bottom, but I've cut it off in this, you would see the date or the time for each candle. And I'll explain what these are too in a moment. So what do Forex traders actually do? The job of a Forex trader is basically, as we said, to determine the future direction of a currency pair. Now, we can do this in a few different ways, and we'll go into that a bit later on. The term for this is technically betting, but you can use it pretty loosely because I like to think of it as investing, not betting. When you bet, you're normally betting with odds that are skewed against you, whereas in Forex, everyone has the exact same exchange rate, so you don't really get that. It's just based on how you predict it, based on that works out if you make money or not. So here's the other interesting thing. In Forex, you can make money on rising or falling exchange rates. It doesn't really matter as long as you actually predict it correctly. A lot of people think if you look at a chart and it's going down, that automatically means losing money. But if you knew it was going to go down and you put a trade in, you're making money while everyone else is losing money. As a Forex trader, that is our job exactly, to analyze the exchange rate graphs and the economic news, and then we use that to build up a prediction of the future move. Once we have that prediction, we can go ahead and actually place a trade, and it's a little bit complicated to actually place a trade, but we'll get into that as well. And the two basic rules of this is if we buy, we're expecting the exchange rate to go up, and if we sell, we expect the exchange rate to fall. This is pretty simple. If you buy it at a lower price and it goes up and then you sell it, you keep the profit in between. Whereas if you sell it, you basically borrow it from your broker, sell it at that high price, so now you've got some money. You wait for the price to go down and buy it back, and then you give it back to your broker and keep the profit that way. Neither of those are quite as complicated as that. You don't have to do each little step. In terms of most modern day trading, it's just a click of a button. So I just gave you a little bit of a sneak preview there in the first slide, or in the slide before this, but there's two main types of how we can analyze the markets and try and predict a move. The first is technical analysis, which is what we do by looking at the charts and trying to see how price moved in history, and then try and work out what it's going to do next. The other type is fundamental analysis, which is really, really important, yet a lot of people seem to skip over it. And this is the analysis of the economy for each of those different currencies, because it's no good buying into, say, the Great British Pound if it's going down in value due to Brexit, for example. So, technical analysis in a bit more detail is a financial analysis. Technical analysis is a financial analysis that basically uses patterns in market data. So humans are really predictable. Anything that we do in the history, we're going to do again in the future, especially if it works well. This means that graphs, when we look at them in the history, often seem to repeat again in the future. This is pretty much what technical analysis is based off solely, and you can use it to identify trends and make predictions in the market. You can work with only technical analysis if you want to. There's a lot of traders out there that do. However, I personally suggest that you learn the fundamental side as well. And then you've got 2 double back-ins for your trade that gives you an even higher probability. So as you probably saw in that first currency, I showed you the chart with the different candlesticks. Candlesticks are basically a way of displaying price movement over a set period of time. So green candles typically show bullish candles, which just means a candle where price rose for a set amount of time. Or you get red candles that show bearish, which is a fall in price for a set amount of time. The colours can change depending on like which trading platform you're using to look at the chart, but red and green are pretty common. The bigger the candlestick body, so the actual coloured part of the candle, the bigger and stronger the move in price was. Bigger candle wicks, however, so the little wicks above it that you'll see in a minute, show big rejection, so where prices travelled before and then wasn't able to withstand staying there and then fell or rose after. Candlesticks form patterns that, as we said, are repeatable and therefore they're profitable to trade as long as you learn how to spot them. So you can see a better example here of some candlesticks where you can see the wicks above them. And each of these little candlesticks tells us a story of a set amount of time in the market and how the price moved. You can look at these little candlesticks and build up a picture of who's actually in control of where the market's going at the moment. Are buyers pushing the price up or are sellers pushing the price down? These candlesticks are going to use four main values: an open value, a close value, a high value, and a low value. Now on this first green candlestick, the open is at the bottom, so this shows us at the start of the time frame, and we'll just say for a moment that this candle represents 1 hour of movement in market data. Then at the open of that 1 hour, this is where price was. The buyers pushed price all the way up, as we can tell by the green candle. They pushed all the way up to a high mark of here. However, by the time the hour had finished, the sellers had come back in and pushed it down a little bit to close here. So the story this tells us is the buyers came in, pushed up quite hard, and then as it got near this point here, sellers started to jump in again. On the opposite end of that, you have the bearish candle, where we open at the top instead. Sellers push price all the way down, and then buyers come in at the last minute and push it back up a little bit before the close. Now this can be a little bit complicated, but trust me, you'll soon get it when you look at it in a chart rather than just individual candlesticks. So we'll have a look now at a live example on a chart so that you can actually see this a little better. You can actually see we have a live trade on this currency pair at the moment as well. But this is the euro versus the US dollar, the example we were looking at a minute ago. Just the exchange rate is slightly different because, as we said, it does move. So each of these candles, you can see here, the red and greens, all represent at the moment 1 hour. We can see that up here from the 60. If I wanted to instead look at them as daily candles, I could just go to the daily time frame, which will change every single candle to show 1 day of price movement instead now. So if we go back down to the 1 hour for the example we were using, and we just look at some of these candles, we can see right here this one stands out pretty big, a big buying candle. Price opened up here at 18 o'clock, so that's 6 in the afternoon, pushed up for an entire hour, and not until this very high point did sellers actually jump in and push it down the tiniest little bit before closing. So we can tell that from this 1 hour there was a lot of buying and buyers were clearly in control of the market, therefore price was clearly going to keep moving up. Of course, if you was to enter at the very top of this, you've probably missed this entire move already, which is why it's important to wait for price to move back, but we'll get into that later. You can see the opposite end of this candle, where price opened instead at the top and sellers pushed all the way down to the bottom before going even lower and being pushed back up by buyers. However, the buyers couldn't push all the way back up, so it shows that sellers are still pretty much in control of this market, and we've seen that continue. So the second part that you probably just saw on the chart then, the horizontal red lines, are just called support and resistance. This is probably the most basic form of technical analysis that anyone learns when they get into trading, but it's also one of the most vital things as well. These levels basically just indicate somewhere that price is hit before and then reversed off it strongly, so you know, as we said earlier, that as the markets are repeatable, the same thing's bound to happen again in the future. So we can mark it out and we know that when price approaches that same point again in the future, it's bound to happen again, or not bound to happen again, but it's highly likely to happen again, and you can watch out for a good entry to, trade on that signal. Resistance is just price above the current price, So if we get back open our chart sec, we can see the current price at the moment is this green line where the candle is currently. Anything above this point is going to be resistance, and anything below this point will be support. If we then look down here, we can see there's a red line which is support currently. If price moved below this support, it then turns into resistance because it's above the current price. You don't really have to worry about the names of each of them, but they both act and do the exact same thing. Whenever you see price hit it, it reacts strongly. We can see a reaction here, the support. Sellers came in really strongly, but it was at this point where the buyers came back in and started to push price back up again. So we know if we hit this point again in the future, we're likely to see buyers jump back in again. So we mark it out and we wait in future for price to come down to this point. It works the same for resistance. So you can see that we have these, I think this was actually drawn from the daily, but we had some pretty strong lows, pretty strong highs, sorry, probably from this wick here and the highs here. And you can see that each time that we hit this, we had a big drop. This one's especially interesting to look at because of the big wick. We can see that even though we opened here and buyers pushed up initially, we hit this point and then was overwhelmed by sellers within the same day who pushed it even lower than where we opened originally. This is a really strong sign that price is about to go down, and as you can see, it did for a couple of weeks after. So looking at another example, we can see that on here we had a resistance sign right at the top that we drawn out from one high here, another high, there was another high, price did go above it for a little bit, but showed that it couldn't hold above it and dropped hard after again. We had almost another test and then another one and almost another, and you can tell that on each of these, if you had entered on the test of that, as long as you had a stop loss above, you would have made profit each time. So although they're really simple, as long as you put them in the right place based on where prices reacted a lot of times in the past, you've got a high probability already. The other thing that you can add on to this are trend lines, which are very similar to support and resistance lines. The only difference with them is that they move diagonally. So whereas with support and resistance you saw they were just horizontal, trend lines are going to move at an angle, which will help you to see how strong the overall trend is and also what trends we're actually in. Is the pair moving up in value over a set amount of time, or are we actually dropping in value over a set amount of time? When trend lines are broken, price reacts the exact same way as when they break support and resistance. If it does actually make the break through it, it's going to be a strong move, and it's the exact same with a trend line. If it breaks below the trend line, it's likely to be a strong move and reverse the trends that it's currently in. So we can look at another example here now, where you have the trend line, and as well as support and resistance. And you can combine these two to find the perfect point that you want to enter at. So coming up here, we can see that we had a false breakout above to indicate that the price didn't want to go above here yet. Another test with price falling just after, again falling just after, and then we had another fake out above. So at the moment you could be seeing this as a really strong level that is likely to fall after testing. However, because we had the trend line as well, we could see that this trend line was actually going up and approaching the resistance, which essentially means prices are going to get squeezed between these two lines and have to break to either the downside or the upside. The highest probability trade in this scenario is to follow the trend. We always say that the trend is your friend. If you try and go against it, most of the time you're just going to lose money. So we can see here, if the trend line is moving up, we know it's an uptrend and price is moving up over time. So you can wait for a false break below the bottom and also a break above this resistance, which we got here, and you have a perfect entry to buy and get long on the original trend. So those are some of the really basic technical analysis techniques that traders use to form a trade idea. There are far more that they use, such as indicators, other patterns, and just other stuff that you can actually spot in the market, but it would be far too much to go over in one webinar. The other major side, as I said at the start though, is the economic analysis side, where we actually look at the different currencies and the countries and try and figure out what's going on and what currency is going to be most in demand. And don't worry, for this you don't need an economics degree, even though it is going to be quite interesting to look at for the first time. It isn't easy, but you can get it if you just sit down for a couple of weeks and actually try and learn it. I'm going to give you a really quick rundown, and hopefully by the end of that you should understand it a little bit at least. So fundamental analysis is just the analysis of economic data releases, which countries bring out pretty much every day that we're trading, even on the weekends. And then we also look at news events as well. Some examples of these are interest rates, employment data, and other economic indicators, as well, like you can see on here, unemployment rate, building permits, housing starts. All of these things contribute into how in demand or how much people don't want a currency, and that will directly impact the exchange rate. So we can see on here that our first example, at 1:30 p.m. there was a CAD employment change data release. The first number is what it actually came out as. The number in the middle is what the forecast was, and the number on the right is what it was previously. As a basic rule, if you get a number that's stronger than the forecast, then that's a good thing for the currency, and if it's weaker than the forecast, that's a bad thing for the currency. However, higher numbers don't always mean better. For example, unemployment change, or the unemployment rate, sorry, if the unemployment rate went up above the previous or the forecast, that's actually a bad thing, because you don't want unemployment going up in a country. That's not good for the economy. But we can see this was actually for USD, and it came out 3.8% versus 3.9% expected, which is actually a good result. So there was less unemployed than they actually expected. Politics can affect the economy. Yeah, you'll see that in a second as we get through to the other sides. There's all sorts that happens every day that's planned out like this, that you can see in advance. But on top of that, anything that happens in a country, or anything that happens with any leaders of countries, can have a massive impact on the markets without any warning to us. So that is kind of scary, but as long as you know what you're looking for and how to trade properly, you're fine. You'll know how to spot this anyway. So when it actually comes to analysing the economic data, there's a lot of things you need to look at really, but we can look at this one here as a proper example. This was from the other week. We could see USD had an average hourly earnings month on month, which increased 0.4%. That's good for the economy versus a 0.3 expected. The fact that we actually had a higher than forecast reading means that more people are going to be buying in after the data release anyway, because it's come out stronger than expected, which just makes even more people want to buy. The non-farm employment change, however, increased to 20,000, so it did increase, but not as much as they expected. That's not good for it. But then when we look at it after and see we had the unemployment rate as well, which decreased to 3.8% from 3.9, that sort of evens out a bit, and overall it was a good data release. But it's not always as clean and simple as that, with nice numbers that you can look at. You're also going to have news coming out all day, every day that's unscheduled, and they're going to have huge impacts on the market too. So here's some more examples from recently. We had one that was tweeted from LiveSquawk, which is a news service you can get for trading. They tweet out all the news as it happens real time. And they said, Trump trade deal with China coming along, will probably happen. So this is good for the US-China trade deal. So we know that we're going to see increased demand for the US dollar, probably increased demand for JPY. However, this isn't always the case. You can get a data release that's supposed to be bad or supposed to be good, and then the market reacts in a completely opposite way. So you have to be really careful when you see this news to actually look at the market's reaction as well and make sure they correlate before you actually place a trade on it. This is very typical with Trump news. You can see any tweet by Trump or anything that he says, and it can be taken very differently by different people, and the markets will just have huge different reactions to it. The other example was Trump cancels additional North Korea sanctions and an olive branch of sorts to get talks back on track. So I'm pretty sure these were actually in the same day. Yeah, they were the same day. So you're going to have stuff like this coming out all the time. That's going to be impacting it, switching trends, reversing trends. It's quite hard to keep up with, but as long as you know what you're looking for, and you can subscribe to these people on Twitter or through emails or using websites, whatever you want, and you can actually see when they're coming out and getting trades based on it. So traders can plan for and predict the outcome of upcoming data releases and news in various ways. There's one really easy way, well, not really easy way to do this, but the simplest way to do this is just listening to the central bank statements. Every country has a central bank, and that central bank is in control of monetary policy for the country. And basically anything they say is going to go for that. And that's going to have a huge impact on markets. If they decide to increase interest rate, then people in the market are then going to have, like a reaction to that. If they decide to decrease the interest rates, it has an impact on inflation. The markets will have a reaction on that. However, when you actually listen to the central bank statements, they give you a sort of clue into the future of what they plan to do before it ever happens. So you can be prepared for it and actually get on the right side of the trade. There are countless websites for keeping up to date with past and future events that can impact the market. One of my favorites is Forex Factory that I will show you now. This is the one that you saw the examples from earlier. You can see all of the news that came out today, what the actual readings were, what the forecasts were, and what the previous was. We can click more and look for tomorrow's, so we can be prepared for tomorrow, Wednesday, Thursday, and Friday, which is especially important because Friday is a big US news day. There's the non-farm employment change, the unemployment rate, the average hourly earnings, and then some CAD data too. But if you scroll down even further on this website, you get all of the news and hottest stories. So we can look at this one, for example. The PMI at 55.3, March manufacturing ISM report on business for GBP this morning. Actually, no, I think this was for US, sorry, but either way, you go down here and it will tell you all of the different news for the day. If it was scheduled or unscheduled, it will come up in here. So you can see something like this. MPs have taken control of Parliament business to debate different Brexit. This was 3 hours ago. This wasn't anything that was scheduled, but would have had an impact on the market in some way. So you have to just keep an eye on this as much as you can when you're trading, and then you should be fine. So the next steps, in order to actually consistently profit from trading Forex, you can't just go into the market with what we've just shown you and start making your money. You actually need to turn everything that you learn into a well-tested strategy, which is going to be some really strict rules that you follow that will tell you how you enter trades, where you place your stop loss and take profit, how much risk you put onto the trade, how many trades you open a day, how you get out of the trades, how much profit you need. And then once you've got all of that, you actually have to go through and test it and make sure that it works with current market data, and then you can go ahead and actually trade it. So this is what I mean by it's quite a lot of work to get into, but I don't think there's anything that is actually more fun of a job. Being able to sit down and just scroll through charts and spot out patterns to form a strategy is actually quite fun, and when you can tweak it and increase your percentage return just by spending a little bit of time and changing a few of your rules, it does really pay off, and that feels more rewarding than going to any job ever would. But this will involve going through a lot of past market data and analysing all the patterns and trying out many different strategies. That's obviously going to take up a lot of time, and that's before you even learn what you actually need to do to spot these trades. So as a special bonus, as we said, for everyone at the end, we're going to be offering 5 people the chance to work with me personally, and I'm going to be teaching you from scratch how to trade. Everything from setting up your trading account and learning what the charts mean and how to use the trading software, right up to building your strategy, testing it, and then turning it into a live account so that you can actually profit from it. There's going to be no cost to you at all. It's going to be absolutely free. All you need to be is 18 plus, because that's the legal age to trade in most countries, and you actually need some money to begin trading with, but that's obvious. If you're interested in this, then all you need to do is message me on WhatsApp. I'll send you the link in a second in the chat. You're going to get access to one-on-one mentorship, the exclusive VIP Forex training course, which is over 6 hours of video content going over the stuff that I've just been talking about, but in way more detail. If I get up the website, I can actually show you the course curriculum. We go into the details of what actually drives the market, how you can spot these profitable patterns. Here we go. So more on the what is Forex, placing trades, using the tools that you need to actually place the trades, some patterns in the market for you to learn, some advanced patterns, using indicators to build up your strategy, the psychology behind trading, some more advanced trading, so actually copying the banks and how they trade. If you have a look, banks are the big players in the market. They're the ones that actually make moves happen, essentially. And so if you know how they're going to be playing, you can get on their side of the trade and make money, because the reality is most retail traders lose money just due to not knowing what they're doing, and that's how the banks are going to make money off them. As long as you know what you're doing and aren't going with the majority, you're going to be fine. That mainly comes down to creating the trading plan, which we help you with here, and then going through the back testing to make sure it's actually a profitable strategy and that it works in current market conditions so that you can generate profit with it. You're going to get some free trading tools too that I've built up to actually help you learn. So a lot of people were finding it hard to spot patterns when they first joined. We made some software that you can apply to your chart, and it will highlight these patterns for you with the name of them, so you don't even have to look. It will just be highlighted on the chart for you, ready to go. You're going to have the ability also to copy my trades personally, so that you can get in on the trades that we take, learn from them, and hopefully earn from them too. As you can see, as I said earlier, we have this Euro USD trade open, which is an example of one that we sent out to everyone in the group, and this is running in profit currently, which is quite nice. You're going to be getting all of these too. I send a full analysis on why I actually entered the trade, what my reasoning was, why I want to get out at the top here, why I want to get out at the bottom for my most profit. Everything's explained for each trade. You're also going to get a free copy of this success journal, which is a trading journal that we recommend every trader has. This is going to help you keep track of all of your trades, form a strategy, and most importantly, keep track of your progress over time. Something you really need to do as a trader is know what strategies have worked for you and when. And if you don't keep a history of all of that, it's going to be a nightmare when you eventually come to try and change strategy and know if it's more or less profitable than your previous one. And then you're also going to get access to our VIP community. This is where we have a group chat of about 200 different traders from all around the world. They all are going to be watching the markets, so that's 200 different sets of eyes looking out for different things on different currency pairs. It means that you're rarely going to miss anything, and if you do need an extra set of eyes to look at your chart and make sure that your trade looks right, then there's people there to do that for you too. And all of these people have started from where you are now, not at all knowing what Forex is, and have now got up to different stages, some of them, mastering Forex, and some of them that are still in the learning stage. But they're going to be there to help you. So I'm going to put the link to my WhatsApp into the chat box. If you're interested in that, just send me a message. There's, you don't have to message me and then you're in straight away. You can message me and ask a million questions if you want. I'm here to help you at the end of the day. But this is only going to be available to the first 5 people that message and accept it, because I don't really have time to be, helping more than 5 people one-on-one to get them to start trading. So I'll just grab that link so I can put it in the chat for you. In the meantime, if you have any questions so far, because I've thrown a lot of information at you, then just throw the question in the chat box and I'll start going through them now. But that's the link there. If you do want to send me a message, I'll get back to them as soon as I finish the live stream. Or if there's anything that you guys want to see, like if you came here wanting to learn something in particular, tell me now in the chat and I'll go over it quickly for you. Just give it another minute here in case anyone does have any questions, but if not, then that is going to be the end of the stream. If you feel like you still want to learn more but aren't quite ready to start trading with real money yet, still give me a message on WhatsApp, because we have a free course that you can take too to expand on the knowledge we've given you here, but just in a bit more detail. How many hours a day we need to dedicate to learn trading? Well, honestly, you can dedicate as much or as little time as you want, but it's all going to affect how quickly you learn and go through the learning process. The course is about 6 hours long, so I recommend to people if they can just do about quarter of an hour a day and actually go through and study it. So watch 15 minutes of video and then 15 minutes of actually applying what they learn in that video. Basically, at the end of each video, I'll set you a little task to go and do on your chart so that you can learn it properly. Just doing one of those a day is going to take up half an hour max, and you could learn, well, not learn to trade fully, but have a good understanding of learning to trade in probably about a month. Some people decide to do it even quicker, like if you just spend one weekend going through the whole course. In fact, I don't think you even could do it in maybe 2 weekends going over the full course, then you could probably do it in 2 weeks without even doing it in the week if you have a job. When you actually get into trading, however, the hours you need to dedicate are slightly different, because you'll have to look at the news that's coming up for the day and what the charts look like, and you can kind of predict the time zones of where you need to be looking at charts to enter trades. But the beauty of it is, once you have entered a trade, you can place a stop loss and a take profit, and then they run for you throughout the day, so you don't have to be there watching the chart the whole time. It will either hit your stop loss and you'll be out with a small loss and proven wrong on the trade. This is just a normal part of trading. Or it will go down or up to your take profit, and then that will close the trade in profit for you automatically as well. You're welcome. Hopefully that answers it a little bit. Basically, the answer I give to people in short is just throw as much time as you can into learning it, and you're going to get there pretty quick. So yeah, after all of that, you go through the course, and so after you've gone through all of that, you don't trade by yourself. You will know how to trade by yourself. That is our goal. We don't want to just build up traders that are good at copying our trades. We want to build up traders that can actually go out and trade on their own to make profit, but you're still going to have our guidance for life, basically. Once you finish the course, you keep it, you stay in the group chats forever, you will have our trades forever, and I'll be there as your mentor forever. It normally takes our students somewhere between 1 and 2 months until they're consistently profiting off trading themselves. But that being said, we have had some exceptions recently. I've had one guy in particular that joined, and in his first couple of days was already doing really well trading on his own. I think he must have just done most of the course in a couple of nights. Really, though, once you have the strategy in place, the trading isn't hard. It's just looking at charts and applying your rules to it to see if it matches. If it does, you follow the strategy and press buy or sell based on what you've worked out was profitable in the past. And that's pretty much it. Yeah, so I will be helping you with it. There's an online course that teaches you most of it, but I'm still going to be there to help you out with anything that you're quite stuck on, because obviously I understand you're not able to learn everything perfectly from a course. So I'll be there pretty much all day, every day, to be able to message you or call you and help you out with that. Before finishing, could you give us any advice or personal recommendation, please, since once you were new in trading? Yeah, so the best advice I can give anyone that's getting into trading is don't try and go into it on your own. That was a mistake I made. I first started trading with about £2,000 and I didn't really know what I was doing. I watched a little bit on YouTube, seen a little bit on the internet, and I basically thought I could trade. Soon got proven wrong by the markets. They'll do that to you. The markets don't care about you losing money. So they can be ruthless if you don't know what you're doing. That was basically my whole goal around building the company. Was I'd lost money trying to learn to trade, and I wanted to wipe away that experience for everyone else so that they could actually learn to trade with someone who's already been down the path and stay away from all the common pitfalls, pretty much. To give you a bit more detail on that, if you want to write them down, like the most important things to look into are going to be risk management. A lot of people mess this up and go into the market. They'll place half of their account size on one trade. It goes wrong, and then boom, that's most of their money gone already. And you can't do this in Forex because losses do happen. The idea is having bigger wins than losses and more wins than losses. So that's number one. That's like the most important thing. Number two most important thing is don't go down the trap of adding too many indicators to your chart. A lot of people learn about these indicators and that's it. They'll add like 10 different ones to their chart and it can get really messy really quick. So to just give you a quick example of that, if I go back to my charts, I have some indicators on here. I have the blue line and the pink line, which are moving averages, and then these yellow S1, S2 lines that are daily pivot points. You don't worry about what they are for now, but basically a lot of people will get into the trap of finding all these different indicators, and there's a lot of them, and they'll go through and add all of them to their chart, and it just ends up too messy to even be able to read anything, gets way too overcomplicated, and they lose all their money from it. So the money I recommend starting with is quite a hard one because it depends on where you're from. People from different countries have different amounts that they can use. Different brokers also have different minimums, so that's another thing to play in. But the personal amount that I always recommend starting with is £250. The reason for that is in my course I teach 2% risk per trade, meaning any single trade that you place, the maximum loss you can have is 2% of your account. That basically means you need 50 losses in a row to lose all your money, and that's quite hard to do even if you try, to be honest. So it's a pretty good standard rule, but with 250 you've got enough room to place quite a few trades. So here's what happens. If you have a £100 account, for example, and you place 4 trades with 2% risk, your broker might say to you, okay, you've got too many open trades, we don't want to let you open anymore because otherwise too much of your account's at risk. That's called margin. It's also in the course a little bit too much to be explaining in the webinar. But if you can start with 250, it gives you enough freeway to be able to place enough trades and with a high enough lot size to make some decent profit. But at the same time, it's also not too much so that while you're learning, you're going to have big losses. 2% of £250 is only £5. Tiny loss for a big lesson that you'll learn from the loss anyway. You're welcome. I'll send a link in the chat in a second now to the free course as well. I recommend going through the offer that we said about before though, where you can join us for free still, but with all of the packages. So basically if I go back to here, if you message me on WhatsApp, there's a way that you can sign up with a broker that we work with and they will sponsor all of the training for you. So they're going to pay for the training. You don't have to pay for anything. You just open your trading account with them. You need a trading account anyway to actually trade, so it doesn't make a big difference to you, but you will get all of this for free, so that's a big plus anyway. That's the way that most people join us and learn, because this is the full-on training course that will teach you everything. The free course is a basic, well, it's a bit like the webinar, but a little bit more in detail in each of the subjects that we've been talking about. So if you actually want to get hands-on trading and turn it into something that you do in the future, this is the best way to do it. Just message me on WhatsApp. Is there any more questions or anything you want me to go over? I don't mind going over anything that we've already said about in the webinar, or any other subjects if you have any in mind. Also, even if you're not interested in actually joining us, feel free to save my WhatsApp number anyway, and then you can just ping me with any messages you have to do with trading. I'll be more than happy to answer them for you. But I can't really see any more messages popping up, so I'm going to end the webinar. If, like I've said, I'll put it in there one more time anyway, but if you do want to continue with us, then just send me a message over on WhatsApp, and I'll get back to you straight after this webinar. Thank you for staying and watching this tonight, guys, and I'll see you in the next one.